What up, guys? It's January 3rd, and I want to go over Tesla stock, okay? And the recent action in the stock is definitely worth talking about, okay? And I'll be honest, I don't like talking about Tesla stock because there's a lot of fanboys, a lot of haters, very few people in between, like myself, that talk about the stock and give their honest, non-biased opinions about it. I may be a little bit biased because I own a F-150 Lightning, of course, and this Cybertruck. I would never buy this, of course, even though I think it looks awesome. But I do want to discuss something I've been thinking about, which is exchanging my position in Ford, taking the money I have in Ford and putting it in Tesla stock now that the stock has been beat up. Okay, so that's what I want to talk about today. Make sure you leave your like, subscribe, all that. Let's get on with it, okay? So here we go pretty quick. We're showing a chart of Tesla in the red and Ford in the blue, okay? And I want to show here in yellow, kind of like a very similar path they followed in the last year. This is a 1 year chart, very similar path until about right here, October, mid-October, in which both stocks sort of deviate from each other, okay? We want to see what happened. It's worth checking out a Tesla stock down 72, 73% on the year and seeing if it's worth kind of going from here and starting down here again to see if we can go right back up, in the glory days of Tesla, even though I think that's not a big possibility with either the Federal Reserve and monetary supplies being drained out of the economy. Very hard to do, okay? But let's take a look into that. Let's dive into it. So there's the question, right? Ford versus Tesla, like that movie Ford versus Ferrari in a way. But of course, Teslas are faster. I think they're more efficient and their technology is better than Ford. And that doesn't mean that Ford is not catching up. But at the end of the day, it's the value proposition, right? It's what makes you the most money. And we have to know where these stocks stand, where the business are going, and sort of what the state of business is. Okay, so let's go over that real quick, and we'll start with their product and their value proposition on their products. Okay, so I'll start with Ford here, and I'm putting their most sort of known businesses here. Okay, and Ford Model E is the Ford EV line of vehicles. Ford Model Blue is the ICE, which is internal combustion engine. That's your gas vehicles. Tesla, of course, with their Model S, 3, X, and Y, their solar, and what they're dreaming about, essentially, that hasn't come to fruition yet here, okay? Now, the value proposition here is pretty simple, okay? If we're taking the two EV lines for Tesla and for Ford, I think the value proposition of the Mustang Mach-E is pretty compelling in comparison to a Model 3 and a Model Y. So if we talk about the Model 3 and the Model Y, we're talking about top of the line trims with full self-driving at $70,000 to $86,000, okay? And when it comes to the Model Y, if you're extending your budget to $86,000, $90,000 out the door with taxes, I think that a F-150 Lightning makes a lot of sense for you. A lot of things you can do with a truck that you cannot do with a Model Y, okay? And the value proposition of the F-150 Lightning with the backup power feature that you have to back up your home is an excellent value proposition, especially if you live in Texas, Oklahoma, or somewhere in the Midwest where your power grids are not very, they're not very reliant, okay? So the one thing that I see here that's very differentiating are two things, right? So we have the kind of like the normal people line for Tesla. This is where the normal folks can buy vehicles here, right? More normal people, right? I think most people are still sort of in that, $20,000 to $50,000 range as far as vehicle buyers. That's most of the economy, most of the buyers out there, car buyers. But the most normal people that can buy Teslas are right here in the 3 and the Model Y. Okay, now when it comes to the Model S and the Model X, if you're spending 150 grand on these, you're in a completely different tax bracket. I ain't worried about you. I don't think they're making that many of these guys anyways. So when it comes to these two, not too worried about these here. I don't think there's a lot of expansion in this price range here when it comes to Tesla, okay? But when it comes to Ford, right, I think that the value proposition, again, for the Mach-E and the F-150 Lightning is impressive in comparison not only to Tesla but to Polestar, to Hyundai, to Volkswagen. I think it's an excellent value proposition, and the F-150 Lightning, of course, first mover advantage when it comes to the electric truck business is an incredible advantage for Ford. Okay, the other thing that I see here that Tesla surely doesn't have is a business and a fleet sort of implementation for the F-150 Lightning and the E-Transit van. The E-Transit van, of course, only for fleet businesses, right? And nothing here can be used for fleet or businesses there, right? Maybe I can see maybe how Model Y maybe could be used for that, but I don't think I've seen any fleet Model Ys or Model 3s out there, okay? Now, of course, nothing too crazy here, but the Ford Model Blue, when it comes to their value proposition, the Super Duty and the Maverick are the ones that I think have the best value propositions and the best track for revenue growth. The Maverick is the small pickup truck, of course, that is a gas pickup truck, gets about 36 miles to the gallon, very popular, and Ford never thought it would be that way, okay? And selling a ton, selling as many as they can get. Essentially here, no shortage of demand, same as here, no shortage of demand as well. So as far as the demand equation, same thing, okay? Now, let's move on here. We'll talk a little bit about Ford here. In our Ford position right now that we have, our 500 shares at $12.74, currently down in the position about $531, 8%. A little bit over 8% down in that position, whatever. I would probably add to the position if I was down maybe 15 to 20%. Not there yet, likely won't get there, especially at that valuation. So not too worried about being down on Ford stock when it's paying a 5.16% dividend yield, okay? But we got seasoned and focused management for Ford, okay? That's an advantage for Ford all day long, specifically if you know what's going on with Elon Musk. Definitely a management advantage at the moment, okay? Not saying forever, but at the moment, okay? The S-Series truck will surpass 640,000 trucks sold in 2022. This is including the F-150 Lightning. That's probably a very small part of the amount of trucks that were sold in 2022, but they dominate the truck market and have done so for ages, okay? F-150 Lightning is the Motor Trend Truck of the Year. How could it not be? Amazing vehicle, okay? If you hear me talk about it, it's all good, nothing bad, okay? The EV lineup for Ford is young, okay? So when I say it's young, I mean that it's not the most technologically advanced. The technological edge does go to Tesla for full self-driving and for range, for performance, but we're talking slight differentiations there that I don't think make a big deal on people's decision making. I think that people's decision making is more about style and about cost and about tax savings, okay, which Ford does have the advantage there, okay? So, again, first mover advantage for the F-150 Lightning, the first EV truck in the space, and is expanding production. That's something that's advantage Ford. Who knows when Tesla gets that Cybertruck out? Like, who knows, right? We're talking about the entire vehicle lineup. It's the best it's ever been, okay? Jim Farley, the CEO, with the Bronco, the Raptor, the Ranger, the European and South American Ranger editions that have come out. Great vehicles, best vehicle lineup ever. And they're focused on making cars that are profitable, which is a big change from many years ago, the way that Ford has sold vehicles and acted in South America, Asia, Europe. They're trying to make each vehicle profitable, okay? And their strategy of selling vehicles right now is we're building the profitable vehicles first and then the break-even ones later, okay? Now, the bad thing is pricing pressure, okay? It could fall victim to pricing pressure driven by higher interest rates, but that's everybody, right? That's not just Ford, that's everybody, okay? But the big disadvantage for Ford is unions, okay, and supply chain issues. They do seem to deal more disproportionately with unions, which Tesla doesn't have unions, of course. Ford does, but the supply chain issues do seem to affect Ford disproportionately compared to Tesla. Tesla does and has managed better their supply chain capabilities and their supply chain issues, okay? So we got revenue growth here for Ford. That's not in doubt. Expanding margins, though unlikely in the face of macro pressure. So we're talking about the overall economy, right? Cars are harder to buy in a recession, in a high inflationary environment with higher for longer interest rates, okay? Now, recent Wall Street downgrades have hurt the stock, okay? We just had a Wells Fargo price target of $10. They just had a decline, but the stock is not far from that $10 price target already. So a decline or a downgrade by Wells Fargo on Ford stock to $10, ain't convincing anybody to sell that stock. Definitely not. Okay. Now again, 5.1% dividend yield on Ford stock. That's great. Some people do say, hey, it's in danger, or the dividend is in danger because of these macro pressures, these headwinds that are coming from a potential recession. We'll see, guys. As long as they're paying it, I'm taking that dividend all day long, and that's advantage Ford. Tesla does not pay a dividend, okay? And the valuation is very, very cheap for Ford in comparison to Tesla. We'll talk about that in a second. Now let's talk about the state of the business of Tesla. Okay, a little bit of disarray here. Okay, and not much to do with the business and the way the business is ran, but a lot to do with Elon Musk. Everybody knows that Elon Musk and the acquisition of Twitter has been a complete mess, right? And if you don't think it's been a mess, I don't know what planet you live on. Maybe you're one of them fanboys that can't say anything wrong about Elon or be critical of anything that he does. Like I said, I'm neither a hater nor a fanboy. I'm sort of in between. I don't like idolizing personalities and things like that. I'm not in that business, okay? But he is preoccupied with Twitter. We have to admit that, right? That is definitely a fact there with Tesla being preoccupied with Twitter. He's even sleeping at the facility. He's dedicating all his time to Twitter. He's even said, hey, I'm stepping down and so I can focus on Tesla because shareholders, that's what you want me to do. But who wants to take this business, right? So that's an advantage Ford right now. As far as management focus, definitely advantage Ford, okay? Now, we'll talk about the Elon brand being severely damaged of late. I don't know that you can argue that the brand hasn't been hurt, the Elon brand, right? I like the guy, but ever since this Twitter thing, it was a bonehead move to acquire Twitter for $44 billion. I don't care what you say. The debt interest payments that this guy's paying for Twitter, they're to the tune of $1.5 billion a month in interest payments alone. I mean, it's just a bonehead move. A lot of ego there, and a lot of not sound, sort of business savvy, definitely not there in the Twitter acquisition. You can say whatever you want or say, hey, you don't know what it was. It could turn out good. You never know. But he tried to back out of it, right? He said, I'm going to acquire it for $54.20 a share for all the shares of Twitter. And then he said, oh, wait, I'm trying to back out. Here's my attorneys. And I'm going to go to Maryland court to try to back out of this deal. So you can't deny that he tried to back out of it, and then he just reversed and said, never mind, I'll just acquire it, my original deal. So not only did he acquire it for the same amount that he offered at the beginning, he spent a bunch of money on attorneys. So bonehead move for sure on the Twitter acquisition, okay? So that brings on the danger of further stock sales because of margin calls. I was reading I think it was a Business Wire article that was saying, hey, he's already been margin called at least twice. If you don't know what margin call is Elon Musk's wealth is greatly dependent on the price action of Tesla stock because he owns so much of it, right? And he sold like $25 billion in 2022 worth of Tesla stock, right? Because he has to pay back these loans that he takes against Tesla stock, okay? People complain, oh, he doesn't pay taxes because of the loans that he takes. Who cares? I don't care about whether he pays taxes or not. His attorneys will take care of all that. But the margin calls are real things. So when he goes on Twitter and says, my Tesla sales or stock sales are done until 2025, hard to believe, man. Can you take him at his word? No, you can't. He's not followed through before. So you can't expect them to not follow through if he gets hit with another margin call. If the price of Tesla keeps declining, remember, if it keeps declining, he's going to get margin called again for another loan. So can't take him at his word there, unfortunately. Okay, now the Q4 deliveries, a lot of buzz around the Q4 deliveries, which I thought were good. Okay, they're up 40% year over year. They missed estimates by 3% or 4%, something like that. I still think it's advantage Tesla over Ford any day of the week. So I think the Q4 deliveries were good. The yearly deliveries were amazing. Okay, but the macro environment is what it is. On a higher rate environment, affording those X's and Y's and and those vehicles becomes harder and harder. But that's a break even for everybody, just like we talked about in Ford stock. Okay. Now, beefy target for short sellers, the stock, right? The stock is a beefy target for short sellers. Okay. So it's still an expensive valuation. There's people that call Tesla, hey, it's not a car company, it's a tech company. If you go by that standard, still overvalued. Okay. And even more so if you're saying, hey, it's not really a tech company, it's a car company. It's way more overvalued as a car company in comparison to Ford, to GM, to Volkswagen. Way overvalued. Okay, so we'll talk about the valuation in a second, but there's no hiding it. Specifically, talking about the Ford P of the S&P 500 in comparison to Tesla, you're still paying a big premium over that in a high rate environment in which these tech stocks just get demolished, just like we talked about in our last video. Okay, so this is an annoying part for me, more of an annoyance. Okay, the cult following, the Tesla fanboys, the Elon fan club, the ones that see no wrong with what he does. He you know, he's a genius. Sure, he is. He's a genius, right? But is he human? Does he make mistakes? Yeah, you bet he does. All right here, right? All these mistakes that have happened here. He's not perfect, nor should you expect him to be. So this to me is a little bit of just kind of like, if I own the stock, I'm gonna have to listen to these fanboys all the time when I'm trying to find news or whatever, and I just don't like doing that. Okay, and I think it's detrimental to the brand for sure. Okay, now not much to do with the actual Tesla new vehicle business, but the used vehicle prices of Tesla are declining 4 times faster. This is another Business Wire article that just came out recently that a friend of mine gave me. Thank you for that. And it says, hey, the prices of these used vehicles are falling 4 times faster than other car markets. That means commonality, right? Commonality means, hey, you're no longer surprised to see a Tesla on the road. If you rewind 3-4 years, you know, you'd look on the road and be like, oh, look, it's a Tesla. That's so cool, right? Now, do you do that? No, not really, right? It's kind of like seeing a Toyota, in my opinion. And these cars don't look, when they're 60, 70, 80, $150,000 cars, they don't look like, a Model S to me doesn't look like a $150,000 car. A Model 3 doesn't look like a $70,000 car to me, right? I can see you spending that money on an F-150 Lightning, which looks like a $70,000, $80,000, $90,000 truck. But a Model 3 and a Model Y do not look like vehicles that should be costing anywhere between $70,000 to $90,000. It just doesn't look like that to me, okay? Now, the China plant in Shanghai closed recently because of more Roni lockdown concerns there. Not good for the stock, but temporary, I would say at best, okay? And the stock pays no dividend. Ford pays you 5%. These guys are paying no dividend. When it comes to the risk analysis of Wall Street, that means the stock price gets hit higher, has a higher beta name, meaning more volatile than your normal dividend earning stock, okay? Now, it's still a long-term play for Tesla, in my opinion. Still a long-term play with the possibility of at least tripling your money, which is a big advantage there. But that has a lot to do, I think, also with 2021 and the way that stocks were valued in 2021 when interest rates were at 0, where money supply was easy, right? And getting a loan to buy a Tesla was dirt cheap, right? 0%, 1%, whatever it was. You can even buy a Tesla with a credit card back then. Nowadays, not so much. That's a big headwind for the business. But I still think that it does have the capability of doubling or tripling your position if you happen to build one in Tesla. Okay, so the stock back then, when we talk about 2021, no business having a forward PE over 100. No business. So that's what we're talking about. High liquidity, cost of capital being cheap. That's no longer the case. So the stock cannot be valued the same way. This is where the market does their multiple contraction and contracts the value of Tesla stock, and the stock dives as a result, okay? But at the end of the day, it's still great business with, you know, great technological edge. So you can't take that away from these guys. I mean, their gigafactories are just huge, and they're the greatest and latest. So you can't take that away from these guys. Now, if we're looking at the valuation here, we're a little bit side-to-side valuation, and what we're going to focus on a couple of things here. So we're talking about market cap, right? So different things to consider about market cap. So a little bit under 50 billion for Ford, and a little bit under 400 billion for Tesla. So Tesla, I think, hit that $1 trillion market cap back in 2021 with easy Fed. Now with hard Fed, now it's less than half $1 trillion. A lot of people have been suffering on this one, I'm sure. A lot of folks badly hurt in Tesla stock over the last year. I mean, it's probably horrible. I'm not badly hurt on Ford stock, though, right? I'm not badly hurt on it. I'm down 8%. So I'm not badly hurt on it as many people in Tesla may be. And these people are hoping, hey, hopefully interest rates go down, right? And inflation gets controlled so we can get back to these higher multiples and actually see that multiple expansion, right? But, the headwinds are there. Competition is there. So is it more likely that Ford goes down or the market cap of Tesla still goes down? And I believe that there's still probably more downside here when it comes to those headwinds and the higher inflationary, higher rate environment that we're in. Now, we're going to focus on Ford P because this tells the whole story. Now, so the Ford P of the S&P is about 18.8 times, right? The S&P 500 as a combo, 18.8. So when it comes to Tesla, you're paying a premium against the market. Tesla is more expensive than buying the market. Okay, it's been that way for a long time. It's been a long time since we've seen this stock under 30 and a Ford PE. A long time. And I said on Twitter, I said under 25 it gets interesting, and I'm definitely more on the buy side than on the sell side for Tesla, or on the not consider, on the sidelines for Tesla. And under 25 starts getting very interesting. Okay, but now we look at a Ford P of 6 at a huge discount against the market. So we have a stock with great growth on one end that sells at a premium against the market, and a stock with less so growth, right? But still great product, great business model at a huge discount against the market. So how do you make that decision, right? How do you know you're making the right decision? And the answer is, I don't know yet. I don't know that I make that move yet from Ford to Tesla. And the main reason why is the discount that you're getting on the Ford P against the market. Also on a price to sales ratio, no brainer when it comes to the price to sales. I mean, Ford is almost selling at a price to sales ratio of 0, right? When Tesla sells at 5-point sales. So when it comes to world domination, people say Tesla, world domination. Is that the case? Is it that Tesla will dominate everything coming in the next 5 years as far as every car in the world will be a Tesla? I don't think so. People aren't built that way. I think that some people are going to love Teslas the same way that people love Ford or hate Fords. So people are just not built in the way that everything is going to be a Tesla. I just don't see it, okay, when it comes to vehicle sales only. So this is still a little bit too expensive in comparison to this to make that final move, okay? Let me know if that makes sense to you, or if it doesn't make sense, or if you just think I'm an idiot, go ahead and put a comment below, okay? Thanks. Now, that's my 2 cents on the whole Ford versus Tesla equation, okay? I hope that if you have Tesla stock, you don't get hurt too much, or you're not sitting there waiting for lower interest rates to make your money back or to gain. I know that everybody considers themselves a long-term investor, but there's a lot of traders in that stock, guys, okay? So stay safe out there, okay? Make sure you don't get too hurt. If you're going to pick up some Tesla, be smart about it, okay? It's a great company, so you probably can't go wrong with it, but you got to have the right time frame to make your money back and wait for an easier Federal Reserve to make that money, okay? Best of luck to you. Peace out.